Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, 4 o'clock in New York. It is Thursday, January 28th, 2016, and this is the Daily Report for Gold and Silver. We do have the precious metals under pressure today. Gold trading off roughly $10 on the day, currently trading at 1114.60. It's traded to a low of 11.65, so you can see we're about $3 off the low, and the high today has been 11.25 on the day. When we look at silver also trading lower, but that is actually taking more of a hit in terms of a percentage drawdown, off about 1.6% or 22 cents per ounce at 14.23. So traders, there is no doubt I would have liked to seen some follow through on the rally, which has really been developing from about the middle of January. So for the last couple of weeks, we can absolutely see that when we look at our daily chart. This daily chart contains one moving average. It is a 34-day moving average. So it is not a very short-term nor a very long-term moving average. And we can certainly see that we have had this market, in terms of how we could characterize it, really a succession of higher lows. That's what that uptrend is. We can also say that we definitively saw some sort of bottom or base being formed as this market was trading roughly at about 1040, 1050 in that area. We also know that we have overcome a first top level that to me was critical, which was around 110. That's the plus side of it. On the other side of it, what we do want to realize is that where we did have resistance, we should now see support. And as you can see, when we take a look at the lows that we have seen today, they come in roughly in this area. So we'll absolutely have to see. And the real question is whether or not we're going to have the type of pattern, and let me blow this up a little bit, that is indicative of a slower pace as a market moves up. And what I mean by that is this: you get your double bottom here, then you'll get a succession of rallies and retracements or corrections. The corrections always must have a higher low than the previous one if we're in an uptrend. I mean, that is the definition of an uptrend. So you get that again here. You get a nice little spurt and it kind of falters and then it comes down, and lo and behold, we do get a higher low. So now we've had this particular rally here, and of course my sense is that we might see this market fall back a little bit, but the question is where. And that's kind of why we tightened our stop up to just below 1107, because what we're trying to do is make sure that these lows that were hit here a few days ago, that we don't see the market actually go and track into that particular price point. But that brings up another point, and to me, it is also something we definitely need to pay attention to. We can see it whether we look at this triangle or we look at a basic bear channel. Let's go ahead. And we're looking at the fact that gold was breaking above this. Realize it's a close only, so you'll see it go in and out. But once again, we've not really permanently cleared this level of resistance, which is the upper level or upper channel line itself. So that's what we've got to see. And we can also see that potential resistance when we look at our alternate wave count, and that is with these two compression triangles. You can absolutely see where we did see some highs come into the market, and those highs did match the top of this channel. So we need to see absolutely some real follow through, and we are at that critical point that we'll really want to pay attention to. Of course, stock market taking its cues mostly from oil today, and so my sense is that depending on what we see, not only tomorrow, but at the beginning of the week in terms of oil prices, will be a great influencer in terms of the equities markets as well as our positions in gold. So traders, lastly, do want to look at crude oil this morning, and we have this market up almost 5% again today, over 33.77. We talked about the fact that when we looked at our long-term studies and this market was really under pressure, of course this is back the last couple of weeks, we looked at this price point roughly at $25 in terms of a technical basis because of the really strong data points that we get when this market was trading in 2002, 2003, and really had this become a critical area of support. We've only gotten the one bounce so far, but from that bounce, as you can see, we hit intraday lows close to 25. And again, this is a weekly chart, but you can see this is 26 on the low. And then this is last week, of course, this is this week. So for the first time in a very, very long time, we've actually had 2 weeks of consecutive higher pricing in oil. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.